Hey guys, I'm Annie Allen, a certified divorce coach, RCSD divorce realtor, and your host for the Starting Over Stronger Divorce Survival and Recovery podcast, the show that's all about bringing you the practical, professional help you need as you divorce and hope for creating a life you'll love after. I don't skim the surface around here. If you want to dive deep into the wholehearted wisdom of how to have a better divorce experience than everyone else you know by changing what you do, this is the podcast for you. After a lifetime in dysfunctional relationships and over a decade in recovery, I'm ready to share everything I've learned and everything I'm still learning, along with the collective wisdom of amazing divorce professionals and divorce survivors. Because I believe the keys to a better divorce and healthier relationships to come should never be a secret. The enlightening and unconventional wisdom you'll find here is actionable and sometimes even fun, like friends chatting over coffee. So come listen in for a fresh, honest look at doing divorce differently. Starting Over Stronger is here for you, for the help and hope you need before, during, and after your divorce. Let's dive in.
Welcome to the Starting Over Stronger show, where you'll find help and hope for your divorce survival and recovery. Divorce well, live well.
Welcome back to the show. We are here today to revisit the subject of credit from another angle. We certainly cannot stress credit enough during the divorce season of life. And in season 1, we actually spoke with ReScore CEO Jana Fox about how your credit score is the number one asset in your divorce. And we had a great conversation about why. And today I have invited ReScore's other founder, Paige White, to the show to basically approach the importance of credit again, but just from a slightly different angle. So welcome to the show, Paige. I'm so glad you're here.
Well, thank you for having me, and I'm grateful to be here as well. The education aspect of credit is my favorite part of what I do.
Absolutely. Well, so there's certainly a lot to be said about bad credit. But before we get into that, you helped found ReScore, I know, with the goal of educating and empowering people to improve their credit score and their credit knowledge. You once told me ReScore is all about giving people a hand up, not a handout. I love that. So tell us a little bit more about how you see and help people to truly change their lives just by changing their credit knowledge and their credit score.
Well, honestly, Annie, exactly what you said, education is the number one thing, because there's a lot of credit repair companies out there that what they'll do is they will kind of put people through a monthly deal and unfortunately drag them on a little bit, but there's no education behind it. So they're not teaching them what to do to build that strong, healthy credit profile. Basically, what they're saying is, okay, we're going to try to remove as many negative items as we can off of your credit report, but at the end of the process, okay, some things are removed, but do you really know anything? Have you learned anything? Are you setting yourself up for the future? So that is where we take a lot of our pride in being able to set them up for the future. So I have clients, Annie, I'll be 100% honest with you, that have some really tough items on their credit report. Maybe I don't get them removed, but we've done so much on the education that they still are in a good position and they can still go apply for a home loan or whatever it is they're looking for.
Yeah, that's awesome. Well, like I said, there's so much to say about bad credit. We just kind of decided, well, first of all, ReScore exists because of bad credit, right? So, but we want to put a positive spin on it. And so we know, and we certainly want everyone else to know, that establishing a good credit score will help to save them money and just make their life easier, especially during and after a divorce. And so there is so much more that a positive credit score can do for you. And that's what we're going to talk about today. So we're going to dive into some of the benefits of maintaining or rebuilding your good credit. Today's episode is called The Power of Positive Credit. So we're just going to talk about all the positives of doing what it is that you do for people and what they can do on their own. And so I just kind of compiled a list from our conversation when we prepped, and I'm sure there's other things that you'll want to contribute as well. The first thing that I have on my list is low interest rates on credit cards and loans. What are your thoughts on that?
I mean, of course, that's a huge factor. I'll use myself as an example, Annie, because this is insane. And I know people are doing this because I've lived it. Check chasing. I don't know if you know what I mean by that, but writing a check to cover a check. And you're constantly chasing these things. Well, what happens is when you have bad credit, and like Annie said, I was a client first. I've been on the other side of bad credit. What happens is you are literally just chasing checks to help survive. And the reason why you have to do that is because your interest rate on everything is so high. You're paying so much interest. You're never getting your payments down. Mm-hmm. One year, Annie, I had looked at the end of the year bank account, and I had paid $5,300 in bad check charges. $5,300 in 1 year. Think about what I could have done with that, or I could have got caught up on my credit cards. But yeah, the interest rate is really a huge factor. I'm looking at one here, so if you see me looking away, just talking about mortgage rates. So this is fairly recent. If you have a credit score of 760 to 850, 3.2%. Again, that's going to be lower right now, but this is a little bit older. This can't be updated nonstop. Mm-hmm. Good credit, 700 to 759, 3.5%. Average credit, 660, 699, 3.6, and all the way down to bad credit, which is 620 or under, and a 4.8. Well, the difference on the excellent credit is you're talking about a 30-year mortgage on a $150,000 house. You're going to, with excellent credit, a $150,000 house, you're going to pay $230,000. Well, that's normal, right? We know how that works. But poor credit, you're going to pay $283,000. So you're going to pay an additional $50,000 over the term of the loan. So a lot of times people think, well, I don't know if it's worth hiring somebody for credit repair. Now, that's all relative. Is it worth $70,000 or $50,000 over the term of the loan? Probably worth it. Auto rates, a 60-month loan at $30,000. With excellent credit, you're going to pay about $2,600 in interest over that 60-month loan. But poor credit, you're going to end up paying almost $12,000 in interest over the term of that loan, 60 months. And then credit cards, excellent credit. I know it kind of sounds a little strange, 17.6%. Why would somebody with excellent credit pay that much? But sometimes it's not about your credit. All credit card companies are going to try to make money on you. But poor credit, 25.4%. So if you have a balance, it's just continually increasing. So if you pay the minimum, you're never going to get out of it. You're going to be paying that credit card. Maybe $1,000 balance might take you 5 years, 10 years to pay because you're paying interest. So it's a huge factor.
Yeah, it is. And, actually you sharing a little bit of your story just reminded me that I wanted to actually start with that. So why don't we back up just a little bit and tell us your story of how you got where you are today as the CEO of ReScore?
Yeah. Oh, and I think Jana may have mentioned that too, but she was, we were both clients. We've been on the other side of this as clients. So in 2008 and 9, right, when everything crashed and so many of us were dealing with just trying to survive, that was where we were at. My husband and I lost our house, and we just decided one day to walk away from it. We lost about $100,000 of income. So we were making really great money. So I don't want anybody to feel sorry for us or anything like that. But we did lose about $100,000 of income in about 3 months. And then so we decided to walk away from our house, some cars, and just made that decision. It was actually a very freeing decision, even though it was very emotional and hard to do. The year after that, my dad died. 7 months later, my mom died. And the year after that, my daughter was in the hospital, and she has Crohn's disease. So she was there for 5 weeks. So it'd be fair to say I didn't care too much about my bills. Mm-hmm. I was literally just trying to survive emotionally, mentally, physically, trying to get through it. So when somebody comes to us, Annie, and they're like, I don't know if you can help me. I got you.
I've seen worse.
Yeah. Well, as long as people are willing to do their part, because we really do try to hold our clients accountable. And what I mean by that is in that teaching process, telling you the things that are going to help you, and you got to do your part and we'll do our part. We'll get there. We'll get everybody there. Everybody's going to take a different path and a different time frame, but we'll get you where you need to be. So that's just kind of my story. That's why I'm super duper passionate about what I do and love being able to help people. And like you said earlier, give you a hand up, not a handout. Just kind of come along. Let's get you where you need to be.
Yeah. Because, ultimately, if they don't learn something through the process, they'll just be back there in no time, right?
Most people, yeah, because it's just a lot of times it's poor decisions. A lot of times it's not. I think that even in my factor, what happened to me wasn't in my control, but I also had other factors that I made some decisions along the way that weren't the best. And so I could have done some things different there, but I also wasn't educated. And most of our clients, Annie, are really great people with bad life circumstances. And we can look at their credit report most of the time and actually see, 2017 was a rough year, huh? And they can say, yeah, divorce or, death or sickness or whatever, job loss. And so we can see that usually right off the bat.
Yeah. Well, that's a good point. Well, so back to our list of the power of positive credit, we talked about interest rates, but first of all, you got to get approved for the credit card or the loan, and you actually have a better chance of that when you have positive credit, right?
Absolutely. It's a huge factor. And I know one of the things that we talked about also, Annie, kind of going over with the interest rates, and if you don't mind, I'll just kind of jump into some of the other factors that affect your credit.
Yeah.
And no, not affect your credit, that you're affected by with your credit.
Right. Okay.
Right. Above and beyond the interest rates. Another factor that a lot of people don't take into consideration is your car insurance is something that will be affected because they actually grade you very heavily on your credit scores with your rates. And so anytime we have somebody that has improved their credit scores, we always recommend that they do go get their rates shopped through their current broker or agent and see if they're going to be able to save a little bit of money, because almost always they can. So that's the power of positive credit right there.
Yeah.
Another one is a lot of times people think that doesn't make sense, but your cell phone. So if you go apply for a cell phone, with AT&T or T-Mobile or whatever, those are going to be based on credit now. So they have like a base cost, right? So they're, okay, well, this says my cost is going to be this, but a lot of your fees and stuff are going to be adjusted because of your credit scores as well. So that's a huge impact.
Including security deposits, right?
Oh, absolutely. Yeah, that's a big factor in a lot of things, especially that's a good point, Annie, with apartments. That's kind of another one of the things that ties into that. And that might be something that, you have a lot of instances when it comes to divorce. If somebody is having to separate from their home and move into an apartment, that deposit's going to be based on that, or you might just be flat out denied, which is devastating when you're already going through such a horrible time. And I know that's why you bring such incredible value to your clients, being able to educate them and get ahead of it before you actually have to walk away from your house or whatever that looks like.
Yeah. Whenever possible, absolutely. The quicker jump you get on it, the better. And the security deposit applies not just for apartments, but for the cell phone contracts and utilities and several other things probably, because, basically all of these companies are looking at risk factors. And when you have a low credit score, they read that as a risk to their bottom line. And so they're going to ask for a security deposit if they don't see a good credit history. So the positive there is having the good credit history means you don't have to pay all these security deposits and be out that money for a year or however long when you're applying for all these different services and utilities and such. And so it's worth, the time and in the investment to do what needs to be done to improve the credit rating.
Yeah, absolutely. I'll never forget one year I had to do KCP&L, which obviously is now Evergy here locally, but a $500 deposit. And we're talking about when I was already at the lowest of my low and I had no money. And then you've now asked me to pay another $500. I can barely pay the regular bills. How am I going to come up with that? But that's a huge factor in that. And that does happen to people with utilities and stuff like that.
Yeah.
Yeah. Another thing that people, this is really something that most of the people that we talk to don't even know, is military. Do you work with a lot of military when it comes to divorce? Or
I have had some. Yeah.
Yeah. And that's one thing that people don't understand is if you're trying to get like a rank increase in the military and it's between you and somebody else that's equally qualified and they have better credit scores, they're going to get the job over you, as well as security clearance. So if you're in a position to where your job needs that security clearance, a lot of times you're going to get denied. So we have a lot of people in the military that reach out to us and need help to be able to even do those things. I mean, that's crazy to me because you're giving your life to the military and then you're still judged. I always say we're judged by our weight, our age, and our credit scores.
Oh, how true. Well, that is a really important point that I bet a lot of people do not know is that the military factors there with the rank increases and security clearances. I certainly didn't know that. Not that I have a lot of involvement with military, but that's important for people. And, that brings up the fact that actually your credit score might be considered with any employer, not just the military, right?
60% of employers actually look at it. I know that's a big thing that it's not just your credit scores. They also look at your social media. Obviously, that's not my expertise, but I do know that your social media and your credit. So again, if you are up against somebody else that is equally qualified, that can be a factor, and you don't want that to be something that holds you back. A lot of times when people come to us, Annie, they are referred to us by a mortgage lender. So a lot of people are at that position now because they want to buy a home and, they had to put the brakes on because they couldn't get into that home loan. We're not here just to help people that are trying to qualify for a home loan. We want to help everybody, society in general, to get more educated and the knowledge so that they can be empowered. That's one of our things, empowering people, changing people's lives by changing their credit scores and empowering them to change their credit scores. So that's a really big factor for us as well, and in going into the teaching aspect.
Hello, listeners. This is Annie. I just wanted to remind you that you don't have to do divorce alone. If you've been listening for any length of time, you know that I'm a certified divorce and life transition coach and an RCSD divorce realtor. Maybe you're just here gathering courage and information for a future divorce decision. But if not, and you're in the middle of a divorce and you're struggling with these kinds of issues, please don't feel like you can't afford the help you need. I'm so thankful to be able to provide you with this free resource. And I know from the feedback I get from listeners like you that there is a lot of help being found here. But there is more, and you can afford it. Here are 4 ways you can get more help from starting over stronger. 1, the least expensive investment you can make with starting over stronger is just $5 to $20 a month as a Patreon subscriber. You just go to patreon.com/SOSdivorce, and that's spelled patreon.com/SOSdivorce to see what new content you can expect with this small investment. Number 2, the next size investment you can make in yourself is in the weekly support groups that are offered through Starting Over Stronger for just $55 a month, where you will be a part of a growing group of women learning about toxic relationship recovery, clarity, divorce survival, and Life 2.0 divorce recovery. These groups of women just like you are learning and getting support from one another in some incredible ways. The newest group meets on Monday evenings from 6 to 7 p.m. Central, and you can email me at Annie@startingoverstronger.com to learn more, or sign up at meetup.com by searching Starting Over Stronger Toxic Relationship Recovery. 3, if you need to sell or buy a home in Kansas or Missouri as part of your divorce, I offer dedicated divorce real estate consulting assistance to ensure that you're making the smartest decision possible about the marital home, whether you keep, sell, refi, or want to buy something new for yourself. You can email me at annie@startingoverstronger.com so I can help you be sure you're making the best decision about your home. And if you don't live in Kansas or Missouri, I can make a recommendation for you to another RCSD realtor who will be able to provide you with these same divorce-related services. And fourth, and most importantly, we all struggled through our divorces in ways we couldn't have imagined we would have to when it all started. This is why I got certified as a divorce and life transition coach. I wanted to save women time, money, and stress during their divorce. And private divorce coaching may seem like an expensive luxury that you can't afford, but I assure you it is the exact opposite. It is a critically important service that will reduce your attorney's fees, help you get your words and actions aligned with your goals and dreams, which will ultimately reduce your stress and probably shorten the duration of your divorce process. So if that sounds good to you, visit startingoverstronger.com and book a discovery call now. It will cost you nothing to find out how divorce coaching can help. So as you can see, Starting Over Stronger offers a variety of tools for you to grab a hold of during your divorce so you don't have to do it alone. Reach out for the help you need. I'm here when you need me. Now, how does that work with employers? Are they judging your credit to hire you or after you're hired? And the reason I'm wondering about that is because don't you have to give somebody permission to run your credit?
Yeah, you do have to give them permission to do like a hard inquiry, but there are sometimes there's ways around that with like soft polls and stuff like that, which is not an actual hard inquiry.
Okay.
So your credit score is not going to be affected by it.
And you're not going to know that they did it necessarily.
Not necessarily. And you're not giving them their social, but a lot of times people can get information from you without your social. It's really a crazy thing is you think on your credit report, right? You have a credit report. You think they have all of your digits of your digits of your social, your date of birth, your name, your address. You would think it all has to be accurate, but that's not how credit works. They only need 7 of the 9 digits. Or they can just go off address and date of birth or name and address. It would be a lot better system if they were required to go off the exact thing for everyone.
Yeah, that would be good. It would be good if they were upfront about doing it too. But yeah, that's interesting. So one question I had while you were talking was if, we do sometimes give permission for a background check for employment. Could the credit report be a part of that?
Yeah, that's kind of how it's tied into that.
Okay.
So your credit scores, Annie, are an indicator of the future. So remember earlier you were just talking about risk. Mm-hmm. And so that's going to be kind of an indicator from your background check because there's factors that are involved in there. And I don't know all the factors. I'm not an expert at that. And so I won't pretend that I will be. but that's what it is. Your credit scores are an indicator of the future. And so if you have poor credit scores, then the indicator is you're going to have them in the future. If you have a late payment, the indicator is you're going to have another late payment. So they drop your credit on purpose because of that risk factor, like you said.
Right. Well, so in summary, we've kind of been saying, that your approval for credit or for loans, but also your rates are all affected, whether or not you pay security deposits for any of those things is affected. What we haven't really talked about, though, is once you are approved, your borrowing capacity is based on your income and your credit score. And one of the benefits of having a good credit score is that banks are willing to let you borrow more money, right? Because you've demonstrated that you can pay it back when you borrow on time. So
even with good credit scores, you still have to make a certain amount of money for sure, just because if you they don't think you can pay them back. It doesn't matter, if you have pristine credit. But those two do play role together. And what an empowering, amazing feeling it is to be able to walk into your local bank or go buy a car and just be like, yeah, I'll take it. And you know you're going to get the best interest rate possible. And then if you could shop around. So if you want a Toyota or whatever, and you can go to lots of Toyota dealerships, and then you have that buying power to be able to get the best rate, the best car, and they'll work with you. And they want to earn your business, opposed to been there before where you're desperate to get somebody to even approve you, and you'll take whatever interest rate it is because you just want the approval.
Right. Yeah, you're right. It is a very emotional experience. I actually have I'm a licensed real estate agent as well as a certified divorce coach. And I'm actually working with somebody on a purchase right now that they were practically in tears when I called to tell them that the offer was accepted, because they've been through such a battle with their credit and just finding a house in this seller's market. And so it was just kind of like, and it was a guy too, which just caught me off guard. And I thought it was super cute and funny. He was just like, I am so stinking nervous right now. I guess I'm accepting it. It was just like this really exhilarating, feeling of, I can't believe this is actually happening, after all the years of the just hopelessness and, just feeling like home ownership isn't for me. It's never going to be for me because of my credit score and things that have been holding me back. And so it is incredibly empowering. I'm sure the work that you do is very rewarding. So thank you for sharing that.
Extremely rewarding.
Yeah.
Yes.
You mentioned earlier better car insurance rates. I know that auto insurers, just like all the rest, are just added to the list of companies that will use a bad credit score against you, and certainly use information from your credit report and insurance history to develop your risk score. So they will often penalize people who have low credit with higher premiums. So a good credit score here is going to typically mean you're paying less for your premiums, right?
Absolutely. And it's a soft pull on your credit as well. So that's important for people to know. I didn't give them permission to run my credit. Well, first off, you really kind of do give them permission when you fill out the application for a rate quote, but it is a soft pull. So it's not giving that hard inquiry. Mm-hmm. But having that as a factor, I understand maybe it's not going to save you, tens of thousands of dollars like it would on a home loan. Mm-hmm. But if you can save, $40, $60, $80 a month, and that's not unrealistic. I'm not making those numbers up. I mean, it can be substantial. What you could do with those? So if you save on your car insurance, well, now you can take that money and then put it over here to the credit card, start getting those paid down. And then that's where, the snowball effect mm-hmm. comes into play, where you can really start putting a dent into things.
Mm-hmm. It just gives you more negotiating power. When you have a good credit score, you have leverage to negotiate for yourself with all of the different companies and creditors that you work with. And in fact, in our conversation, I kind of got the idea, I really need to be in touch with my credit card companies because I do have a good credit score and I can probably negotiate an even lower interest rate because of it. So it just gives you more bargaining power, more control over, what you're being charged for services. So that gives you the opportunity to take advantage of attractive offers that you've gotten from other companies or, whatever. So it's very important to empower yourself in all the ways that we are talking about today. And what other thoughts do you have about the benefits of having positive credit?
Well, one thing I know I wanted to mention, obviously, because you are a divorce coach, this is really important. And you and I have chatted about this before, is divorce attorneys, I know, have their clients' best interest. I understand that from deep down. I am friends with several divorce attorneys, but I just don't think they understand the impact of credit. And so they're not educating. And so I think it's not our duty as well with our company to educate divorce attorneys in the sense that, if you have a client and there's debt and it's a credit card, for instance, and the husband's supposed to pay the credit card and the wife says, okay, well, I don't have to pay it. And then the husband has a charge off and he's not paying his bills. It affects the wife.
Yes.
And vice versa, or if they're in a mortgage. This is the biggest factor, and you may see this as a real estate agent, but in the divorce decree, it states that spouse A is supposed to refinance that house or within a time frame, or they're responsible for the payment. Well, if they're both on the loan, then spouse B has that in their debt to income ratio. A lot of lenders will take that consideration, and they'll look at the divorce decree and say, okay, well, we can see that it's their payment. But the problem, Annie, is when spouse A has late payments. Well, it's on spouse B's credit report, and there's nothing they can do about it. So they come to us and say, can you help us remove it? We can't, because you're responsible for it. I always say that debt is on a federal level and divorce decrees are on a state level. So there are some lenders that take that consideration as well. So I'm not saying there's no hope, but it's not something that we can do our magic wand and get removed. There's just a lot more to that. And so what we also do in instances like that is the education side, and try to have them build a strong, healthy credit profile over here to balance out the negative. So I always say, think about credit like a teeter-totter. There's positive and negative. We want your positive side to weigh more. So we're trying to teach you how to do that. But we also educate, so again, back to the credit card. If you have a credit card, you're both on there, and this spouse keeps being late. Well, this spouse can close the card. But sometimes they don't know that. And so they keep taking these dings over here when they have a little bit more control than they think they do. So that's why it's important for you as a divorce coach to have the education as well, because then you can be guiding them and hopefully guide the divorce attorneys too.
Yes, absolutely. And I appreciate you bringing that up. It's one of the biggest things that I address with my clients. And I definitely agree with you on what you started out this by saying, which is that the attorney is not responsible for your credit. Now, it would be nice if attorneys knew everything about everything and did everything for somebody through divorce. And unfortunately, that is what most people go into divorce thinking. They don't even realize they're thinking it, but that is what they're thinking. They're thinking, I hire an attorney and I pay him a lot of money and he does everything. That doesn't happen. And the good attorneys know that. And they collaborate with other industry professionals to make sure that their clients' needs are being served well. Ironically, I probably lower attorneys' fees in most of the cases where I coach a client. And yet most of my client referrals come from attorneys because they don't want to deal with all the stuff that I'm dealing with, all the organization and emotion and just getting it all together emotionally and physically and financially and every other way, getting the person connected where they need so that all of these things don't go by the wayside. And one of my biggest recommendations to my clients is run a credit report and monitor your credit throughout the whole divorce process, especially if it's a toxic situation where you have an soon-to-be ex who may sabotage you intentionally. And that happens, unfortunately. And then sometimes it's not intentional. It's just neglect, or, everybody's overwhelmed and so many moving parts at once. It just, something gets missed. And, one late payment on the house can drop your credit score by 100 points and it won't recover for 2 years. You don't need that when you're getting ready to have to either purchase a new house or try to rent for a while so that you can build up to purchase later. So it is incredibly important. And in fact, that's why I say the number one asset in your divorce is not the house. It's your credit score, because actually the house is probably the biggest liability in your divorce in most cases. So it's very important to understand why that is. And I hope today that we have brought some light to that for people who are listening or watching. And so basically, I just want to sum it up by saying I think the best part of a positive credit score is the bragging rights, because, you have all the benefits and you have all the, ease of, just a smoother financial life. But a good credit score is something to be proud of, especially in today's world, because it's all too rare, especially if you've had to work hard to come back from a deficit because of a life circumstance. And certainly, being able to take your credit score from the 500s to the 700s or 800s even, is going to feel incredible. And you're going to be, so empowered to never let it get back there again. And so if you've never had to experience a bad credit score, keep doing what it takes to maintain that good score so that you don't have to do that. And it does only take a few missed payments to start getting off track. So it's something you do have to monitor all the time, right?
Yeah, and that's the thing. I mean, nobody wants a bad credit score, but it can happen really quickly. Like you said, you can drop your scores as much as 100 points overnight from one late payment. And I'm for anybody that hasn't had to deal with bad credit or financial issues, praise God for you. And I'm so grateful that you haven't had to. But for those of us that have, let us, guide you, Annie with the divorce side, us, with the credit side, or whatever situation you are in life and just need that education. Like we've talked about before, this is empowering to be able to have that as a bragging right. And we are judged by it, like I said earlier, and you put your head in the sand and you think it's going to go away. It's not going to go away. And here's the thing, Annie, a lot of people think, to get good credit, I'm going to have to wait 7 years for all that negative to drop off. No, that's not true. My average client can be mortgage ready, and that's different for everybody. So you may not be able to go get a conventional loan at a 680, 700. That's okay. You can still be mortgage ready or get better at car insurance. And most of my clients on average take 4 to 6 months to get in the position to get better credit scores. And then we can put all those other lessons in place so that in a year from now, you're going to be even better. And 2 years from now, I've had people, Annie, from bankruptcy, 2 years from bankruptcy are in the 700s. If you learn to play the game and navigate through the system, you can get there.
Very good. Well, I just want to say that I think that's all we've got to say, unless you have more to add.
No, I think that we've touched a lot of great things, and I appreciate, just the opportunity to be here, and how passionate that Jan and I both are to being able to help people change their lives by changing their credit scores. And if there's anything we can do for, any of your listeners, just never hesitate to reach out. It's a judgment-free zone, I will tell you that.
Very good. Good to know. Well, I make a lot of recommendations to ReScore. And for those listening, that is www.rescoreyourlife.com. You can meet Paige or Jana or any of their lovely employees who will help you through this process. And I am at Annie at startingoverstronger.com. If anybody has questions, wants me to connect you to make a personal introduction or to talk about either credit repair or monitoring or just getting through divorce in a better and different way than most of the people you know. There's a way to do that by working with a certified divorce coach, and I am here and happy to help with that process. So I will just say that's all we have for today. And thank you again, Paige, for being here, and listeners for being here as well. And we will be back again next week with more help as you divorce and hope as you are starting over stronger.